Hey everyone, welcome back to the channel. Today we're doing something extremely important, something that I hope more people would just do. This is your complete beginner-friendly guide on how to start investing in the stock market, even if you know absolutely nothing at all. Today's video will stay 100% focused on brokerage accounts because that's the simplest, most flexible way to start investing right now. I'm going to try to break everything down step by step, no jargon, no complicated terminology. The whole strategy essentially is going to be based on long-term investing using index funds, which is the safest and simplest way for beginners to get started. Quick disclaimer though, before we get started, this video is for educational purposes, so it's not a personalized financial advice. So you should always do your own research before investing. So with that being said, let's get into it. If investing feels confusing, overwhelming, intimidating, or like it belongs to just a bunch of people in suits yelling at their phones, that's actually pretty normal. But here's something a lot of beginners don't realize. A lot of that confusion is actually by design. The investing world often intentionally makes things a lot more complex than they need to be. This is because when people believe investing is complicated, they tend to think that they need experts, or they stay on the sidelines, or they hand their money over to someone else to manage it for them. So instead of seeing investing as a simple long-term process, it gets presented as this hyper-technical, high-stress game that only insiders understand. For a lot of people, the stock market ends up feeling like complicated charts, constant ups and downs that nobody can predict, and just a bunch of people online making wild claims about guaranteed returns. But the truth is this: successful investing for normal people is actually very, very boring, and it's actually very simple. You don't need to understand every chart, you don't need to predict anything, and you don't need to watch the market each and every day. Once you strip away that noise, investing starts to become very clear, repeatable, and incredibly manageable. And that's exactly what this video is designed to do: cut through that confusion and show you the simple path that actually works for a lot of everyday people. The safest and simplest beginner strategy is this: invest in low-cost index funds inside a brokerage account and consistently over time. That's it. It's predictable, it's simple, and it has worked for decades. Once you understand the specific piece, investing becomes a lot less scary. So let's take a moment to explain what the stock market even is. Most people picture something like the Wolf of Wall Street, just a bunch of shouting and phones ringing. But the reality is the stock market is just a giant marketplace where people buy and sell pieces of company. So when you buy a share of a company, you own a tiny piece of it, just like ordering one slice of pizza versus owning the whole thing. But instead of trying to pick a single company and hoping it becomes the next Amazon, there's actually a very smarter way to do this, which is buy a slice of every major company at one time. And that's exactly what the index fund does. This lowers risks dramatically, and it makes investing just that much easier. Now, you can use any brokerage to invest: Vanguard, Schwab, Robinhood, and just a number of others. They all work. But in this video, we're going to be using Fidelity because it's beginner friendly and it has a very clean interface. And it's actually what I personally use, even though I use other platforms. So if you use a different platform, everything I show you in this video works almost exactly the same. So here's how to do it. First thing you do is go to fidelity.com, and then you're gonna go ahead and click on open account or open an account. And once you click on that, there's gonna be a number of different things that you can open. So we're gonna focus strictly on brokerage. So you're gonna go scroll down a little bit and click on brokerage account. So open an account. Then the first question it's going to ask you is, are you already a Fidelity customer? If you already have an IRA or 401k, then you click yes. But if you don't have a Fidelity account, you click no. So I'm going to go ahead and click no. The next step after that is, just click next. It says it takes just a couple of minutes. So at this point, you go ahead and just input your basic info, social security number, and just bank connection, which you do later. And this is normal and required for all investing platforms. So once you're done, your account is open, and we move on to the fun part, which is to add cash into your account. To do this inside Fidelity, go to transfer, add money, connect your bank account, and then you can choose a one-time deposit or a recurring deposit, whether that's weekly, bi-weekly, or monthly. Automation helps beginners stay consistent. So even $10 or $25 a week makes a huge difference over time. The key here is not the amount, it's the habit. Now let's talk about what you should actually invest in. Since this is a beginner-friendly video, I'm only going to recommend one fund, and that fund is FXAIX, which is the Fidelity 500 Index Fund. This tracks the S&P 500 of the biggest, US companies, and it's incredibly popular because it's simple, low cost, and proven. So if you want one single fund to invest in for the next 10, 20, 30 years, this is the simplest and best option. Here's exactly how to buy these funds. Once you've already created a brokerage account, it'll look something like this. So the first thing you do is click trade, and then you select your brokerage account. Afterwards, you type the ticker symbol. So in this case would be FXAIX. And then afterwards, you just click buy, and then you enter the dollar amount. Afterwards, you preview the order and then place the order. That's it. Now, a question a lot of beginners ask all the time is, do I need a lot of money to buy a fund? And the answer is no, because Fidelity, as well as a lot of these other places, allow fractional shares. So you can invest $1, $10, $20, whatever you can afford. What matters is the habit, not the amount. Now, if you want to be a successful long-term investor, this might be the most important step, which is automate everything. Inside Fidelity, you can automate deposits and investments. This turns everything into something that runs in the background like autopilot. When it comes to how much to invest, here's a simple rule of thumb. Invest whatever amount that you can invest consistently. Let's take a look at just a few examples of what long-term investing can do, assuming a conservative 11% rate of return. So if you invest $500 a month for 20 years, this would equate to around $430,000. Now, if you invested $500 a month, instead you did it for 30 years, this would equate to around 1.4 million. Now, if you did the same thing, except now you did it for 35 years, this would equate to potentially 2.4 million. So this is the power of index funds and consistency plus time. Now, let me save you a lot of stress and a lot of money. Here are the top mistakes beginners make, and I hope you can try to avoid these. Mistake number one, trying to time the market. If professionals can't do it, you definitely can't. Mistake number two, buying hype stocks. If someone says the stock is a guaranteed run or return of X, just run away. Mistake number three, checking your account every day. That's like checking your height every day. Nothing changes. So try to avoid that. And mistake number four, investing money that you need immediately. Investing is supposed to be long-term. So don't invest anything, especially money that you need within the next 3 years. Now, here's the truth. Long-term investors think differently. So here are the core mindsets that you need. Number one, investing is not meant to be exciting. If you're bored, that's good. Boring investors get rich. Number two, consistency beats intensity. Invest $50 a week for years, not $500 once and then just quit. Number three, the market will go down sometimes. This is normal and healthy, so don't overthink that too much. Number four, your job is really simple. Keep buying, hold your investments, ignore the noise. That's it. And then number five, investing works best over decades. That's how real wealth gets built. So here's your entire plan in one clear checklist. Open a Fidelity brokerage account, deposit money, buy an index fund, in this case, the FXAIX, automate your contributions, ignore the short-term noise, and keep going for years. If you follow this simple plan, you are already ahead of most people. And that's it. This is your full beginner-friendly guide to starting investing using Fidelity. No stress, no complexity, just simple long-term index fund strategy that anyone can follow. So, hey, if this video helped you, hit that like button. It really supports the channel. And also comment below anything else that you would want to learn. And if you're new here, subscribe for more clear, beginner-friendly financial videos. So, thanks for watching, and congrats on taking your first step to investing.